So what is up for today? We have breaking news here in the studio. Is Reklaim recently just dropped their year-end and quarterly financials. They're trading on the Toronto Stock Exchange Venture under the ticker symbol MYID and have brought up great returns. It is worth taking a look if you wish to take control back of your own data. Now let's get ready to Reklaim and stay tuned. Starting right away with the vision, it is to essentially control your own data, or rather take back of what is yours. In this regard, personal information which Reklaim allows you to get compensated for. The management is comprised of the president and CEO Neil Sweeney, who has over 20 years of experience in the data industry. Next up is Levy, the current chief financial officer, who has over 15 years of experience in a wide range of high-growth early-stage companies. Most recently, he held a position as corporate controller at Vivo Cannabis, which traded on the Toronto Exchange. Lastly, we have Jake Phillips, the chief technical officer, who has over 15 years of experience in startups and therefore gained a good amount of knowledge across different industries. Just looking at the history of the company, first of all, there was a shell in 2014 called Knoll Resources. And then moving on to 2018, Reklaim was actually founded under the name Freckle IoT, which in 2019 acquired Knoll Resources, so the shell, which then led to the name change Freckle Limited. Afterwards, the next 2 years have marked continuous expansion of the company as they changed their name to Kili, and finally Reklaim. Kili was more of a crypto project, while Reklaim has shaped up to be the data broker, so to speak. Reklaim has a small product offering as they only have one application which one can download only on the Apple App Store called Reklaim. It also has over 100,000 downloads. There we have two revenue streams, so to speak. That's either identity revenue or platform revenue. Currently the company is shifting away from identity revenue to platform revenue due to its lower churn rate. Their customers are made out of Fortune 500 companies. Reklaim has data of around 87 of North Americans, and users are free to decide wherever they want to sell their data, and the application shows the user the data others exploit as well as what they have. They can receive compensation and in terms of a revenue split, and the data can be edited by the user. In the end, the more data there is in the platform, that is the application, the more data can be sold, and thus revenue for both the company and the user. This is the first zero-party data company, as they proclaim themselves, and essentially it is when the user directly sells to the customer, which is different from first-party data or third-party data. When looking at the market size, it is a huge total addressable market as it falls under the data market, which just in the US was worth over 200 billion euros in 2020. This slide also shows that the US is introducing more privacy legislations in each state and therefore making Reklaim's offering more enticing, as the states are either deciding for opt-out policies, that is removing data if there's no consent, or opt-in policies, that is consent required. With other companies such as Apple privacy initiatives, data leaks will be limited, and as a result, companies that relied on other data brokers or the big guys will need to find other companies or cease to exist. To my knowledge, there's not a lot of competition out there. In fact, Reklaim claims that it is the only company that provides this service and that it sources information in a more appropriate way, as most data brokers just get the data illegally, making companies that buy the data liable for huge fees and potential prison sentences depending on the country and state. What do the financials have in store for us for Reklaim? Let's look at the past 8 quarters. First, we can see great increases in revenues. In fact, the fourth quarter had 1.4 million Canadian in revenues with 275,000 in net income, which is great in terms of the top line, but not the bottom line, because the second quarter had less revenues, but about the same in net income. The third quarter has also net income due to other income, as they won a court case, which is why the net income is so big. Otherwise, they would just be breaking even. let's look at the 2023 versus 2022 comparison. We can see a gain of over 70% in revenues, and finally net income, of which 500,000 is as mentioned due to our lawsuit. The assets reveal decreasing cash but increasing total assets. Mostly receivables have drastically increased. It is natural for a growing company, but it should not grow faster than the revenues. Liabilities also decrease, and the shareholder deficit. They still have ways to go to improve their asset statements. Cash flow statement for 2023 reveals positive operational cash flow at 58,000. Overall, for the year, there's still negative cash flow due to interest paid. Highlights from the MD&A include 74% revenue growth, gross margins at 77% for the year, record quarterly revenue, recurring revenue of 92%, operating expenses decreased by 38%, and finally, we achieved net income. Reklaim's platform revenue grew by 94%, whereas identity revenue only grew by 29% due to its lower churn rate. B2B customers only grew by 90%, which signals greater demand from already existing customers. Looking forward, they want top-line growth to be at about a similar rate and a year of cash flow, of positive cash flow in fact. Reductions of debts, outstanding warrants, expanding B2B clients, and keeping their business tight through maximum efficiency. Let's talk about the bull arguments for Reklaim currently and why this could be an appealing investment, as we will discuss the unique selling proposition, guidance, and business model. One could say that the strongest bull argument for Reklaim currently is that they have a unique selling proposition, as they're deemed to be the only one approaching the data market in this specific way, therefore being better aligned and positioned with privacy data rules and thus facing less threats from that direction than their competitors, which will make more companies interested in their products, especially one with stricter privacy policies. One additional bullish argument is that they have issued a profitable guidance for this year, and the CEO has said in the latest company webinar that 2024 will shape up to be a cash flow year, while 2023 was the path to profitability, which they arguably achieved. With that said, management has shown that they are indeed reliable, at least the last few months, which could signal to a potential investor that they are reliable for their guidance and thus will achieve it under normal circumstances. The CEO has also highlighted a better environment for 2024 as more companies are interested to increase their advertising spending. One significant bullish argument, which also ties to their guidance, is their business model: high gross profit margin, relatively lean operations, and the focus of our management to run it tight. This is a company that could add significant shareholder values with scaling their business, as it is SaaS with lots of recurring growth. The CEO is also highlighting that they are not growing faster due to the fact that they don't want to risk going down like other companies who just had the idea of growing for the purpose of growing and disregarding their bottom line. The company also could expand in other directions, such as a Chrome extension, which they once had, or also being on the Android App Store, or potentially also using the website for their purpose as well to add new users. So what makes a potential investor disregard this company and look out for other ventures? Potential factors could be dilution, versatility, and valuation. First of all, we have dilution. The company has loans outstanding to the CEO, which are being converted to shares and therefore increasing the dilution for investors. They outlined in their MD&A that they still want to pursue this strategy. Dilution could be about 30% with all the dilutive measures considered, as can be seen on the photo, and thus minimizing shareholder value. Versatility is the next point, and in this regard, their product offerings are, let's say, they're putting all their eggs in one basket. Yes, they are focusing their efforts for the data business. However, they should consider opening up other avenues such as the website or Chrome extension and so on. They will need an inflow of new users, which will also continuously need to verify their data, making it more lucrative. It takes time to build a platform, and simply having only an application, which also takes 30 days at least to finally claim revenue, may sway away potential customers and thus reducing the so-called networking effect. Lastly, we have valuation, and let's just talk about it. With about 4 million in revenues, they currently sit at a price to sales at about 4 and a PE of around 20 if you consider the current net income. There are other opportunities, and it may scare away potential investors, as Reklaim is definitely not trading cheap, even though their balance sheet is not the best and they still haven't achieved positive cash flow overall due to debt. With the potential dilution for investors, some bears think that the company seems interesting, but it is the stock or rather the price which makes them look elsewhere. As for my opinion, I first of all want to make a disclaimer. I don't own any shares of Reklaim. It is essential to remember that my personal investment decisions should not influence yours. Always conduct thorough research and consider your own financial goals and risk tolerance before investing in any stock. I personally have to state that I have a rather neutral to rather little bearish view of the stock in the short term. Yes, the company seems to be unique and it is definitely having an interesting business model. However, I want one thing to be considered, and that is the risk reward here due to Reklaim's current valuation, which is the most important thing in my opinion, and it is definitely not cheap. It is already priced in to do at least the growth for this year that they had last year. The CEO has mentioned before that the companies currently are more eager to advertise this year, so meaning increase their budgets for advertising. Perhaps it's doable, but I don't want to buy a business that is already pricing in what is expected for this year. I want to be in a stock that has a lower valuation and perhaps not yet as appreciated by the market as Reklaim is. Potential dilution is also quite high, and the risk of only having one pillar essentially makes it a rather riskier investment compared to other stocks in the venture exchange. I will be more interested at a better price, such as, for example, 10 cents or 6. Otherwise, I'm keeping an eye on it as it is on my watch list, and perhaps my opinion changes as investors need to be flexible. Until next time, happy investing.